Hello, I'm David Minchin. I'm the chairman of Helix Exploration with our two large-scale, low-risk helium exploration projects in the state of Montana, which we are drilling in Q3 of this year and looking forward to bringing into production before the end of 2025.
David, good to see you again. And thanks for coming on. You're going to give us an update on where things are. But first of all, I guess if you're drilling soon, it must be lots of boots on the ground at the moment.
Yeah, it's a hive of activity. We've had machines out there for, just over a week now, working on the civils, getting the road and the pad done, and preparing the ground for mobilization so we can start drilling in early August.
Brilliant. Okay, and now you've got programs for Enmore and also Rudyard. Can you tell us about the programs that you've got lined up for each of those, please?
Yeah, so we're starting drilling on Clink 1 on the Enmore project. It's being drilled right on the crest of the dome. It's basically it's a twin and a deepening of the Helium 1 well. The Helium 1 well, you might remember, was drilled a long time ago. It discovered 195 foot of non-flammable gas in the Amazon formation, which was flow tested at decent flow rates. It was assayed at about 80% nitrogen, but was never assayed for helium. Yeah, that's important. In those days, they weren't looking for the helium. They found a non-flammable gas. They just plug and abandon the well and move on to the next place. But nowadays, helium is very important. It's about 100 times more valuable than natural gas even. And that's one of our stacked reservoir targets. We're also deepening beyond that to test the Charles Formation, where down dip drilling has identified between 145 and 175 foot of gas. Again, high in nitrogen. Again, it was never assayed for helium. And our primary target is the Flathead Formation, which is the primary helium producer along the entire Montana helium fairway. That has actually had gas identified in wireline logs at a place called Treasure 1, which is about 6 miles down dip from the crest of where we're drilling. That had between 10 and 26 foot of gas identified in the wireline, but was never flow tested. So proven gas, non-flammable, high in nitrogen. What we're doing basically is testing the grade and flow rate.
So I guess the thing to note here is that this isn't kind of wildcatting. You're not going out to try and make a discovery. You've actually got a discovery. So you're starting, I guess, slightly ahead of the curve.
Absolutely, yeah. We know there's gas in the system because the gas has been tested and in previous historical drilling campaigns. In fact, we can go better than that because we know that there's helium in the system. Because when Bo first secured these leases, he put a lot of his own money into buying these leases over several years. And one of the things which he did was a gas and soil anomaly test, which is basically you hammer a sampling tool into the soil, leave it to sit for a while, and use a syringe to draw some gas in from out of the soil horizon. And he found there wasn't any helium in soil anomaly across the entire closure, which was good because it meant that the cap is working, apart from immediately adjacent to the Helium 1 wellhead, where not only did he get a helium in soil anomaly, he got the highest helium in soil anomaly that his geochem has ever seen. So we know there's gas in the system, we know there's helium in the system, we know there's helium at the surface next to Helium 1. So guess what? We're going to drill. Where's the best place to drill to find helium? Well, where you know the helium is going to be.
I think there's a big audience here who know exactly what you're aiming for and knowing what you want to try and achieve because they're invested in gas plays or oil plays, and there's a lot of sort of similarities. But there's also a huge audience, perhaps broader natural resource investors who perhaps don't know what the process is, what you're trying to do with this drilling. So, in terms of what you're planning to do and what you're wanting to find and what success looks like, can you sort of define what that could be?
We're exploring for helium. Helium is a technology commodity. It's not an energy commodity. It's not a transition. It is technology for the high-tech lifestyle that we live now. So, for instance, every hospital with an MRI scanner needs to use helium. Every microchip that you use in your laptops, in your phones, in your systems, they are all manufactured in a helium environment. Every satellite communication. The spaceship, the rocket was launched with a helium to purge its fuel tanks. Helium is essential in so many things. It wouldn't, if we didn't have helium, you wouldn't quite be thrown back to the dark age, but you'd probably be at some point in the mid 1980s. What we're doing is the world is chronically short of helium. There's been consistent increase in demand as the Internet of Things has been happening, as you get smart fridges and smartphones and Amazon dots everywhere, and with the growth of AI as well, helium is used a lot in AI to keep the processors all running. So you're seeing sustained demand growth from a range of industries, but you're not seeing any additional new supply, because traditional helium has been sourced as a byproduct of large-scale LNG, oil and gas facilities like you have off the north coast of Qatar, or even the barge field in Wyoming. So what we're doing is we're looking, so what's that resulted in is a 20% price increase CAGR for the last decade. 20% every year, boom, boom, boom. So what used to be $100 an MCF is now $500 bulk, spot price over $1,000. Very few people are publishing their prices. Well, one of the groups which have to publish their prices is the US Defense Logistics Agency, who's providing all of the helium for the aerospace welding, for the Army's computers, etc. And they are paying for a range of different size containers. Their average purchase price is over $1,000 per MCF. What we're seeing as well is the CHIPS Act. There's a lot of onshoring of high-tech manufacturing coming out of China and back into the US. So we're seeing increasing demand based in the United States. And that's another reason why Montana is an excellent place to be operating and exploring for helium.
Right, but coming back to the drilling that you're about to do, right, given what you've planned to do, can you just be really clear about what you're looking to find? What are do you know what I mean? Because it's like, companies talk about they go off and do a bit of drilling, and they'll come back and say, we made a discovery, we found some stuff, we've had technical success, we've found some mineralization. In your case for helium, what does success look like in terms of that drilling? What would you like to see in terms of the grade? Any other data that you can extract from your drill process? Can you explain all of that?
So, I mean, we know there's gas in the system, and we know there's helium in that gas. But for us, success is finding the grade. What we don't know is what the grade is. Anything above 0.5% is considered highly commercial, because the value being 100 times more than natural gas. Our nearest neighbour, the closest discovery to us, which is a place called Root, it sits on top of the same thrust fault as us. That's a 3.9% helium. So we've done all of our scoping study base case analysis on a 1.5%, because that's the average for the Montana helium fairway. Anything over 0.5% will be over the moon.
Okay.
The other key criteria for success is, of course, flow rate. So if you look at the parameters that define the economics of a helium project, you're looking at, first of all, flow rate, because that determines how many wells you're going to need to drill to feed your plant, and that's an important aspect of your capital cost. You're looking at grade, because that determines the size of your plant, because plants are scaled on the input valve, not the output valve. So, the 10,000 MCF per day plant at 2% helium is going to produce twice the helium of 1% helium. Then you're looking at the size of the deposit. That tells you how long you can operate that plant for. And importantly, you're looking at the composition of the gas, because if you've got more nasty things inside of it, then you end up, it's a more complex plant, a high capital cost to build all of those. Now, we know the composition We've seen the size of a closure. You can see that from satellite imagery. It's a big closure. Grade is an unknown, and the flow rate is an unknown. So that's really what we're testing for.
Okay, so at some point in the future, you'll talk about you start to understand how you manage the fields, and as you say, with the OpEx side of things,
We're going to do an extended well flow test, a 30-day flow test. We're doing that straight after we've drilled, because we just mobilising equipment from down the road. So we'll have all the results in terms of the commerciality of the project before the end of September, and we can feed that information straight into the scoping study work that we've already done, and we can give the market an idea of the NPV pretty much as soon as our testing is completed.
Okay, so you work out what the flow rates are, what the decline rate is, and get to a point where you can start to understand the economics around CapEx, OpEx, etc. Brilliant. So that's quite quick. Again, if you're talking to kind of very large natural resource investor community, they're used to much sort of slower time frame. So this is, this I guess could be quite exciting for those wanting sort of to see.
That's one of the really nice things about helium is that we're talking at sort of capital cost into development is maybe 19 million. For an NPV of 300 million plus a 1.5% helium. So, incredible. I mean, the barrier to entry is actually finding the stuff. Once you've got it, then, from there into production is a relatively straight line. And the barriers, the economic hurdles you need to climb are surprisingly low, because the margins of operation are ridiculous.
So given that, David, the kind of low kind of capex to production is, I guess that informs the point at which you choose to sell whatever it is that you've got, because clearly there needs to be some separation going on here. Someone needs to bear the cost of that. Do you sell it at wellhead? Do you take it a little bit further downstream? And what's the thought?
So 19 million includes a pressure swing adsorption plant with an inlet valve of 10,000 MCF a day. So the idea is that you feed that with 3 or 4 wells feeding into a plant. That plant gets it to a compressed high-grade helium gas, which you then put into tube trailers. And in Montana, you're ideally situated between the East Coast and the West Coast, so you can truck it anywhere in the United States in just a couple of days.
So it'd be trucked or railed, presumably?
Probably truck. It's just easier.
Right. Okay. Fantastic. Okay. So very low barrier to entry, high margin, given what you're talking about at the moment in terms of pricing in the market place, and kind of quick to production. So there's a lot to like about this. What are the downsides? What are the problems risks that you're managing?
It's got a short fuse, from announcing commercial discovery into being in positive cash flow. It's not many hurdles, and it's not lots of dilution. I suppose the risks, as I've said, are in the next 3 to 4 weeks when we've got the bit turning, and that's when they're going to give us the answer. What is the grade, what is the flow rate, and that will inform directly what the economics of the project are. But to be honest, that's the reason why we're at a market cap of 25 million rather than 200 million. Because there's still stuff to prove. As we de-risk over the next 2-3 months, we can hopefully see that valuation rise and give our long-term investors a good return on their risk cap.
Okay, and let's remind people. So obviously, you raised some money recently, so you're good for cash in terms of these 2 projects that you're drilling. What do we do afterwards? What do we do after these holes are drilled?
Yeah, good for cash is an understatement, Matthew. We raised $9.5 million in April, heavily oversubscribed IPO. In fact, we had an offer book of £22 million, but we only took a fraction of that because that's all that we needed. We don't want to dilute shareholders. That's one of our mantras. The joy of operating in Montana is it's a really low-cost jurisdiction to operate in. We've got all of our service providers are coming from within the state. I think you've got a few coming from Wyoming, but it's all within a sort of 100-kilometer radius. So it's that's reduced significantly standing costs and mobilization costs. In fact, the budget for both wells for a 2-well program was $4.1 million. So out of the 9.5 that we raised in April, we're spending less than half of our raise on the exploration ground, meaning we've got plenty of dry powder coming out the far side to do the detailed engineering work, and importantly to start the process of trying to identify continue the process of negotiating debt finance and other forms of non-dilutive funding. Yeah.
Right. Okay. And so, and just want to be really clear on the business model. Always intrigued by how people manage their cash and the cash allocation. So in this case, 2 wells. If you get what you think what you expect to get, the process would be just with these two holes to move towards commercial production before going off and spending money drilling, because that's the expensive bit.
Yeah, with the wells we've done with the long-term extended, with the 30-day flow test that we're going to complete, we'll have all of the data that we need to go into detailed engineering. So that means engineering of the plant, the recovery plant, getting direct quotes for the pressure swing absorption. It also means sort of working on your well development plan, on your field development plan. So the next, these wells, they're both appraisal wells. They're going to be completed as production wells. So that's saving us money on the way into production. And they'll inform to us where the next production wells need to go.
Okay.
So yeah, there is development work, but all that development work leads directly into that first production before the end of 2025.
All sounds so simple. So I wonder, no, everyone else doesn't do it as well. It's kind of intriguing. I'm intrigued by the speed to commercialization. That's the kind of fascinating bit here. As you say, if you get it right, the upside is plentiful. So stay in touch. Let us know how you get on, and maybe even send some photos over when the jaws are turning.
Yeah, absolutely. It's not long to wait now, so I'll email you some images in a bit.
You're a star. David, good to see you, and thanks for the update. We will follow this one very closely. Thank you.
Thank you very much, Matthew. Cheers.